This big election and what's next for Japan. We're joined by Michael Pento, president of Pento Portfolio Strategies and author of the book, The Coming Bond Market Collapse. Welcome to Biz Asia America. Good to have you on the show. Let me start with this. Here's the problem in Japan, right? The people are getting older. They're not spending as much money as the government would like them to. So the government's trying all these different policies to get them to spend money. What has Abe done so far that's worked, in your opinion?
Worked. I think he's committing Harry-Carry with the whole nation. Is a kamikaze plan. What he's done, he's printing 80 trillion, him and Kuroda, printed 80 trillion yen per month ad infinitum. They have rescued, quote unquote, rescued the country from deflation. They brought about a 2.9% year-over-year increase in consumer prices. But what they have done is they've gone from a creditor nation to a debtor nation. They've taken the debt up to 250% of GDP, thereabouts, and they've brought down real wages by 6%. So I guess he's calling this referendum to give himself another mandate for 4 years. You know, he didn't have to call this vote, but you see that his popularity rating has dropped 10 percentage points in the last few months.
Let me interrupt you here. I want to talk about the debt a little bit more since you brought that up. A lot of people say this 250% or 240% really isn't that bad because a lot of it's sort of local jurisdictions rather than sort of the national debt that we're more used to. Nonetheless, it's still a serious problem, right?
It's an extremely serious problem. You see, here's where the serious problem lies in. They're spending about 50% of all revenue just to pay interest on the debt. And their bond yield, their 10-year note, is trading at 0.39% as of this afternoon. So the only buyer of JGBs is the BOJ. That's a huge, serious problem. There is no private interest for their debt. So God forbid they had to pay a normal interest rate on their debt. They'd be spending all of their government revenue.
Yeah, they'd be in very serious trouble if that was the case.
Absolutely.
Now, what about the consumer? I mean, would they argue that they're a little better off than they were a few years ago?
I don't know. Other than having their stock market go up significantly, their currency is down 40% since Abe took the reins at the end of 2012. And as I mentioned, real incomes are down 6%. So what has the Abe regime and the Kuroda regime done to the average Japanese citizen? They are hollowing out the middle class. They've increased trade deficits. Their GDP hasn't been it's really unchanged since the end of 2012, and really unchanged since 1989.
Michael, you've got the criticism down on Japan. Let me ask you this, though, a little help. What would you do different?
What would I do differently? First of all, you cannot bring about, this is a Keynesian philosophy that's failed throughout recorded history of economics. You cannot bring prosperity by depreciating your currency. So you've got to stop the BOJ from buying $80 trillion worth of stocks and bonds every single month. You cannot allow their public pension fund to invest in stocks when they are at a record bubble. You know, if you look at the market cap as a percentage of GDP, it's never been higher outside of 1999. So he's forcing the private pension fund to sell off the fixed income portion, even because it's not paying much at all, forcing them into riskier assets, stocks, at the very worst time.
But